Okay, let's get straight into it. Some stuff I didn't expect, to be honest. The markets were pretty strong. Didn't expect such a high move, but it's okay. It can be accommodated. Rates working a little counterintuitively. The dollar bounced, didn't expect that. The miners, ooh, sideways, looking heavy, looks like ready for a move down. Gold and silver really getting tighter in a pennant. So let's take a look at all of that stuff and a bit more. So S&P, look at this, just started at low of day, closed at high of day, strong candle, straight through resistance. Next resistance will be tougher. Let's call it 414-ish. Let's see how it goes, but that's pretty impressive. Plus, it's on a Friday, so it gives it a little extra impact, let's say. The Nasdaq, look at that, just opened pretty much where it had left off on Thursday, which is a very strong candle. It was above resistance close, but look at this. Open at low of day, close at high of day, just like the S&P, closing pretty much where I identified resistance, and I think that is resistance. Plus, let's see what happens on Monday, because they've had a big move for 2 days in a row. I do expect a bit of leveling off, coming back down a little bit. You're going to have that sort of indecision day, and then maybe a drop down on Tuesday. So I don't expect too much on Monday after such a big move. Although S&P is not at resistance, it's right in the middle of a vacuum. So, but anyway, Nasdaq, which has been the strongest market for a while, is, in my opinion, Dow Jones, just like the S&P. Those two charts are just absolutely identical. I should actually look at the S&P after the Nasdaq, to be honest. I'm just not used to that. But anyway, Dow Jones just right in the middle of a vacuum, not at resistance, not at support, just straight through resistance, and closed a high of day. So that's got a bit more to go, to be honest. But again, we have Nasdaq at resistance, so we might have a bit of a sideways day on Monday. Russell, okay, same sort of candle as everyone else. Closed at high of day, above resistance. We have sort of this wick here that might be resistance. You can see how weak the Russell is, though. I know it went up more than the others, but given how destroyed it is, this thing will meet a lot of resistance if it does actually go a bit higher. I expect Monday, Tuesday to be sort of sideways down overall. But if it somehow goes a bit higher, it's going to meet this resistance here, which will also coincide with ascending. So plus it's the Russell, plus the banks don't look as good as these general markets. So, and the Russell's been following the banks more than anything else. So for me, the Russell's still going to struggle, even if it does go a bit higher. VIX, no comment. Everything's fine. There's no World War III on the horizon. There's no banking crisis. There's no rates and debt, and I don't know what to say. Who the hell's selling this? Someone smarter than me, because it actually kept on going down. Broken indicator. Someone who knows how fraudulent it is. XLF, I'm going to look at these three banking ETFs because of the financial crisis we're in. We're in a financial crisis. So XLF, which is the senior banks, look, closed the high of day, not as strong as the general markets, cleared this sort of resistance. I didn't put in the trend lines, but you can see, closed above the highs of these last few candles, not this one here, but still it's okay. If it does rally more, which I don't see happening, and this would mean the markets move up to the next level, this would obviously be resistance here. So, but we're not interested in the senior banks. It's the XRE, the KRE and the KBE, especially the KRE, which we're looking at now. Look at this. The low of day on Friday was the low of day on these last few days. So this is really the line in the sand, because if we lose this, I think I mentioned this in, was it the Thursday video? If we lose that, we'll go straight back down to the lows, which is pretty much here, whatever. And that can happen. That will happen on Monday, in my opinion. That will happen. The markets have moved up a lot. Time to retrace a bit. Well, if the general markets retrace, think about it. They've been going up strong the last 2 days, and this is almost flushed that level. Let's call it 43.30. Well, if they just retrace a bit, we should lose it. And if we lose it, we go back down here. Maybe not on the same day. So the KRE is ready to flush this. Let's look at the KBE. Pretty similar, a bit stronger. let's just call it here, right? Just to be sure of it. You can see also the low of days, same low of day the last 3 days, but let's just say it flushes, which I think it will also on Monday or Tuesday. Let's see a close below here. That's what you really want. And then we go visit the lows. And let's just say the absolute lows. Let's just be serious about this, because if we close below the absolute low, then we're definitely done. So the point is, the banking stocks might take down the markets. Now, the markets have been so strong even during the takedown that I don't expect them to go all the way down. But if we start to close below here, I expect pretty big retracement here, which will mean this rally will be a bit of a fake out. Remember, we were strong over here, right? And we still went down. And now we're just retracing this quite well. But, if the banking stocks start to make new lows, if a bank starts to fail, if Deutsche Bank looks like it's in trouble again, I'm sorry, but we're going to retrace and we're going to be testing the lows again. And that can happen pretty quickly. So thank you for the last couple of days. It was impressive, especially the Nasdaq, which somehow is immune to financial crisis. It's not. Okay, but we're still in rate increase environment. We've still got maximum debt. The war's going on. I mean, energy crisis, all of these things are still happening. Black swans all over the place. Somehow the Nasdaq sort of held the market up a bit. But for me, the banking stocks go down, the Russell goes down, and then we'll get these bigger juggernauts coming down too. And then it starts to just, everyone trips over each other trying to head for the exit. So I am not interested in this rally. But anyway, that's what I see. I see the banking stocks and the Russell as the key to the market breaking back down again. And I think it could happen next week because of the lack of a rally in the KRE specifically. All right. All that said, let's move to rates. Rates were weak, actually. It was a down day for rates. Now, the 1 year did close flat, but look at this retracement here. So it looks like rates are ready to drop off a bit. You can see with this new trend, right? So we can already start to identify a bit of a high. We've popped our head hitting resistance, which wasn't obvious to me until really today or yesterday. I think we're going to come back down again on the 1 year. Maybe not all the way back down to lows, but we're going to come back down a bit. That tends to lead to the market going down. That's the new pattern. It used to be the opposite, but let's just adapt quickly. So rates may come back down again, and therefore that means people are buying bonds, maybe out of fear, and the market goes back down again. So 2 year already started. Now, it's true the market went up yesterday despite the rates going down, but let's see what happens next week if it continues and goes to the lows, because normally when we're touching the lows, the markets are going down. So 2 years started to do a reversal candle. 5 year, same thing. 10 year, same thing. Look, that's 1 or 2 days away from touching the lows. 30 year, same thing. And look at the 30, look at this ascending, which I hadn't drawn earlier, which was obvious. So, but look, 1 or 2 days away from touching this. What if we close below it? Then we start to test probably the absolute low down here. I always like to draw the absolute low. So just watch out for this sort of a move. This is the 30 years, so it shouldn't move too aggressively, but I just feel like rates will come back down again, and maybe the market will say, oh, should we be scared? People are buying bonds. So that could feed onto the, the drop in the banking stocks and the general retracement in the markets. So that's interesting. Keep an eye out on that. Let's look at the dollar. Now, the dollar, I did not expect after the close on Thursday, the close at the low here. I mean, it held. It did hold above support, let's say. Let's just do the ultimate support down there. So it did hold, but it was the worst close since we tested it. So I actually thought we would test it, maybe even go below it. We didn't. We just bounced straight off, the low of day, yesterday's low of day, Thursday's. And basically just retraced the whole move. So whatever, the chart held, whether I drew the line there or there, it doesn't matter. Wait for the chart to give you the ultimate signal. Are we going to close above the descending, preferably above the horizontal? That should indicate a move all the way up to 105.5 again. If we close below this, below 102, then, technically and psychologically, we start to go back down to this level down here, the absolute low. Let's call it 101. It's just a bit below. So didn't expect that, but That's what the chart's for. Give you a little confirmation. It wasn't confirmed by the chart. So yeah, and obviously if the dollar goes up, you know, commodities, gold, silver, also the markets. Let's see how the markets react. Well, the markets have kind of ignored the dollar a bit recently. It's more interest rate, well, bonds, but you know, things change quickly as we've seen. So just keep an eye out for the dollar, especially for commodities. Let's look. I'm not going to look at the currencies. They're all reflected by the DXY. I don't want to get too detailed in this one. I already cover quite a lot of detail, let's be honest. Let's look at copper. You know, this is still bullish for me. This is a good candle. This is okay. It's ready to flush. No, it's getting bought up. So lots of buyers just down here even. For me, this sideways action after piercing the descending just suggests, yeah, I mean, you know, what I wrote last time, I thought I deleted all of these, but I just think it's just going to go up and test 4.3. So unless the market just absolutely flushes and takes down commodities, I don't see why copper shouldn't go there. And to be honest, once it goes there, again, you'll have a bit of a cup and handle, a little retracement, and then back up, and then we start to test. Probably up here, high fours, yeah, high fours, with a little stop off on the way maybe. But for me, copper looks strong. Obviously, anything's possible. It could come back down again, but no, it looks strong to me. So natural gas, if it ever had to do it, it had to do it on Friday. So look at that. This, you know, it sort of touched the absolute low of 2.1, 210. And on Friday again, it touches 210, rallies, retraces the whole move, a bit like the dollar. Pierces, goes even higher and closes arguably. Let's go on 15-minute chart. Yeah, didn't start off perfectly. Let's do it from there. Doesn't matter, same thing. You know, it closes above the descending. So now what do I expect? Despite the absolute close on a bit of a drop, I expect a move back up. So why not? You know, a bit of a whatever on Monday, touch the high. And it wouldn't take this long, by the way. It'd be more like this. And then up we go. And it should be pretty violent because because that's what you expect after a massive drop. And essentially start to test, you know, the high twos, the threes, so this zone here, 2.8 to 3. Let's go back to the daily. I mean, look at this, you know. So once we start to move up, the short covering should be pretty violent. Let me just get rid of this. It looks like a candle. So yeah, natural gas, good. I didn't buy any because I've already bought this zone. So once we get to 2.5-ish, I should be, maybe 2.6, I should be in the black. But I don't care. I'm looking for a nice move up to 5. So, you know, 100% from here. And it'll probably take a few months, but that's cool. That's absolutely fine. I parked my money for long term there. So that's natural gas. That's good. By the way, if it does flush, I'll be buying that. I've said that already. But let's see when it gets there. I'm looking for a close under 2 before I start considering where I'll buy. All right, oil. Yes, oil continued. There was that one day where I thought, oh, maybe we'll just come back down and test 70. But otherwise, I was thinking, let's see 75, 77. This bounce from the 65 zone, the long-term support, very impressive. But we're starting to get a little extended, you know. So I think it could get to 77. I mean, if it goes even higher to 80, then I would say the bottom is in, actually, because that's too much of a bounce. You know, imagine you go all the way to 80. You're not going to come all the way back down again. And if you do, you'll bounce. But I don't see that happening. I see something more like, well, let me get rid of what I did. But if we do go to 80, what's more likely, obviously, we'll retrace. You're not allowed to just go through. It's just, you know, illegal almost. You'd come back down again and maybe bounce off one of these two zones. You know, I've seen that a lot. Like if it's a real strong retracement all the way back to the previous resistance, then it suggests this was the low. You're not going to get there, or you desperate buyers. So I'd be more inclined to see something like that. Now, if it doesn't happen, if we just go to 77, then we could, again, we could bounce here, but we could go a little lower. That's just what that's what I'm thinking right now. But so far, it's a pretty strong bounce, which suggests this is a very good buy zone. Obviously, anything can happen. If you come back down here, probably bounce and then flush, but I just don't see that happening. So I think it just had to test this long-term ascending, but this is a good bounce. You know, it's kind of, for me, proven that it's valid. Plus, especially on this day here where it tried to drop again. Look at that buying. That hammer was great. So WTI is strong and impressive. Uranium, that was also strong on its long-term ascending, right? It's very similar to oil. Bounced here. I was hoping for a flush because I'm not in, right? But we closed and I said maybe you call that above the descending, maybe don't, it doesn't really matter. I think that we're gonna retrace. Okay, that was the start yesterday. I mean, everything else was kind of green, but yeah, it's not that correlated to the other commodities. Yeah, I think we're gonna go back down again, at least test this zone, at least. Maybe down more. I'm not sure how much the descending line, it's supposed to act as support on the way down, but can you really call that as above, outside the descending? I don't know. I think if it just comes back down again, it sort of ignores it because it's right on it. So anyway, I expect a retracement, but then I expect it to go back up again, actually. I think it's held quite well here. I do not see it coming all the way back down again and going straight through. That's not going to happen. All the way back down again, bouncing. I don't see that happening. I see more of something like, you know, retrace and then basically go and test this part here. Unfortunately, I have to be realistic and admit that it's held quite well and it's not going to flush. It could though, because if the markets, you know, it's going to retrace anyway. If the markets start to flush, like the banks hitting new lows and the markets just roll over and uranium follows the markets, which it has done, you know, it's not like gold, which can all of a sudden act in an opposite manner to the markets. So if uranium does follow the markets, then maybe it's just bad luck and it's just going to flush. So I'm keeping my eye on it. I expect a bit of a retracement, but it may hold up and not see that flush, even despite the market crash. Okay, gold and silver, this is getting really tight here. This is getting tight. You know, look at this 15-minute. I think these lines I've drawn here, this little wedge is completely correct. I don't know how many others have seen it. I think it's very obvious now. I saw it after the first couple of, you know, these sort of highs, lower highs and higher lows, right? Lower highs, higher lows. Now it's getting very, very tight. I don't want to get extra precise here because it could give false signal like, oh, I'm not going to do that. I'm just going to see which one cracks first. At one point, I thought, oh, it's going to crack. And then it rallied. I thought, oh, maybe not. Again, a bit like the other charts I've looked at, let the chart do the confirmation. I said a close below 1850 for me is definitely enough. Well, now that we have another day, I can move that up. I would say close below like 1855 is probably enough for a signal. But really, just wait for a close below this ascending line, or obviously a close above the descending, all the way around. But I mean, you can imagine, you know, a close at 1990. Let's imagine if it really was strong on Monday. Probably here, yeah, a close above 1995. I mean, everyone's going to be bullish. Obviously, the next day you got 2000. So I'd say close above 1990s and a close below 1950 at least. And then you've got your confirmation. But I favor a drop. You know, I favor a drop. Look how many times we've tested this. Just feels like it's more, you know, the path of least resistance is down. We've had a big move. We've seen this a lot with gold. So I'm just weary. Now, I've sold the miners I want to sell. I'm very, very much positioned for a drop. Let's just say the value I have in my miners, I'll get to that later, basically is the value I had before the big rally. Now, that's gold. Let's go back to the daily. I'm used to the daily. Zoom back in again. You know, if we do drop, okay, then we go straight to 1930, maybe a small bounce. And then what do I think? I think 1880, 1885, if we can call it that. Obviously, you can overshoot 1870, 1860 is really going to find support. I mean, look at this move. We're not going to go all the way back down to 1800. That's just not allowed. That's not how charts work. There are real buyers here. There are central banks. There's investors. There's people who are new to gold who've realized, oh my God, this is the new VIX. There's inflation. Like, this is the ultimate asset. I really think it is. It's almost invincible in such times. But if it does come back down again, I think we'll have support definitely in this zone. You can see, I'm going to leave these in because I think they'll really be valuable when we come back down again. That's how I'm leaning. I think we will come back down again. So watch out. Let these lines do their job. Let there be a close above or below them, and then, you know, use these lines. I will use these lines to try and buy back in my miners. Silver, unbelievable. Another day where gold is down, silver is up. It's really, really caught up. I mean, I could do the silver versus gold. I never do this, but yeah, silver versus gold. Look at that. That's what it's done. It looks like the silver chart, but basically that's how much silver has gained on gold recently. And that's something that's bullish actually for the sector, but it's warranted because it was just too much. You could tell that silver had a lot of catching up to do. Gold is basically testing its all-time record historic highs, and silver's, silver at the time when before I said it was sort of hang around there, so it didn't make sense. But yeah, another day where silver's up almost 1%. I did say 24.20 maybe. Yeah, 24.16, 17, very nice. But that doesn't matter. The point is it's this descending line, which to me, I draw that perfectly. Shouldn't have to count on it being perfect, but yeah, you can see why. And this has acted as very strong resistance. That's why, another reason why I wanted to sell. Down here, I was thinking, gold's tested, because gold had tested 2000 when we were here. But I thought, maybe we can do it. Maybe we can break higher because silver hasn't reached its zone. But now, silver is here. Silver is at resistance now. I don't expect a little move up, a little 10 cents. It's done. Like, silver is at resistance. Gold has already hit 2000. It is at resistance. You can see it's, in my opinion, leaning towards a bit of a drop. So I'm starting to feel bearish to metals now more than any other time during this rally. That's why I've already sold. I trimmed another one of my miners yesterday, but which has really been very strong, and it follows silver. But I thought, okay, silver's really done here. So I've trimmed all my miners. I want a drop. I think there'll be a drop, and you can see why. If it keeps going higher, great. I'm always holding a certain minimum amount in miners because I think they deserve to be all the way up at record highs. But sometimes I have a heavier bag than other times, and now I've really lightened my bags. Let's look at the miners. They're also at resistance. Yes, they could go a little higher. I'm not interested in gambling for another 1 or 2%. You can see why I think gold and silver are at resistance. So if gold and silver start to flush, whatever the market's doing, the miners have to drop. If the market's up, it could hold the miners up a little more than they otherwise would be, but they'll probably be red. So, if you're going to have a minus 1.5% day in gold and a minus 3% day in silver, your miners are going to get destroyed. So I think we will come back down again. I don't know where to. It depends. Obviously, it depends. These lines, they don't really count anymore. Well, this one should. I don't think we're going to get there. That's a bit too aggressive. Little gap here. But, straight away back down to here. Maybe even this zone. That's the low. Yeah, probably there first. 30, 50. Ooh. Let's see. I don't want to get into this too much now. I just want to see the drop start to happen. And I wouldn't be willing to buy straight away. To be honest, when would I buy the miners if they drop? I would judge it on gold, because gold is the main barometer. Once gold bottoms and finds a lot of support, hopefully not after the fact, but as it starts to find support, hopefully on one of the trend lines I've identified, that would be extra confirmation for me. I would hopefully be buying the miners back, the ones I sold, the amount I sold. But I don't think I can clearly indicate where that would be yet. You can see why I think here, this zone here, these two candles, if it starts to go lower, there's no obvious support. Maybe a psychological number like 30, probably not. Could get to 28.50, but that's a bit of a move. This is GDX. These are the seniors from where it closed. Yeah, 10% can happen, but I don't think it will come back down below this. I think it'll be another higher low. You know, if you zoom out, it'll be another. So you've got this low here, higher low. I think it'll be another sort of 28, and then bam, back up, breakout to new, not new highs, but higher levels. GDXJ, similar. You see, this line was good for resistance, although it didn't really work out that much. I think here, just like the GDX, I mean, you could say this zone here, but I think we're going to go lower than that because we got this low here of this candle. But if we start to retrace heavily and gold starts to close below 1930 and go lower, you could have the GDXJ down here in one day, and then the real cascade happens, and then you're right through. So I don't even want to leave this line in, but I'll leave it for now. But I think we'll go lower. I think we'll go 37 at least, maybe down here. We'll see. These lines, they'll probably be redrawn. The lines that really count for me are the gold ones. I think they're correct. So yeah, that's it. Let's not get too far ahead of ourselves. I really think gold and silver will retrace. I want to see how the miners react to that before judging re-entry, and I want to see how the markets are reacting. What if the markets are crashing, the banks are crashing, and gold and silver just all of a sudden skyrocket and the miners go to new highs? That could happen. But I'm positioned for both scenarios. I'm not going to be panicking. I don't panic anymore. Those days are way behind me. I have a plan. I can act robotically, emotionless, and just know pretty much where I'm going to enter, where I'm going to exit, why, according to all the other elements that affect each other. So anyway, that's it. I will do another video today where I cover my portfolio, and I may go into some other assets a bit more. But that was a nice recap. All right, hope that was useful. Thank you. Enjoy your weekend.